Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of corporations. Today, we're diving into the latest report from the Middleby Corporation. Don't let the name fool you, there's nothing middling about what this company does. Let's see if their recent performance is cooking up a storm or just a lukewarm meal. This report is a Form 8K, a snapshot of important events for investors. The most recent event happened in February, so let's get started. First up, we have the financial results from Middleby for the last quarter of the past year. Basically, how much money they made and where it came from. The company released a press release about its financial results. Let's dig into what it said. Companies use press releases to promote the good parts of their business, and sometimes investors need to read in between the lines. Okay, so it looks like Middleby has its common stock listed on the Nasdaq Global Select Market under the ticker symbol MIDD. This just means you can buy and sell shares of their stock on the stock market. We are going to look at their financial results for the last 3 months of the past year. This will give us insights into how Middleby performed recently. Investors will be watching this closely to see if the company met expectations. Let's jump right into that press release. This is where the company puts its best foot forward, so we'll need to be critical in our analysis. Now let's look at the numbers. Remember, we're trying to understand if Middleby is thriving or just surviving in today's economy. Looking at the bigger picture, Middleby operates in 3 main business areas: commercial food service, food processing, and residential kitchen equipment. The company makes and sells a wide range of equipment used in restaurants, food processing plants, and even our own homes. For the 3-month period, Middleby's net sales decreased to a little over $1 billion. When sales go down, that can be a bad sign. It could signal weakening demand for their products. Not only did sales go down, but the amount of profit they earned decreased to about $87 million. This could be due to several factors like increased costs or lower sales prices. Adjusted net earnings decreased to $121.2 million. Companies often use adjusted numbers to give investors a clearer picture, but we should always be aware of what exactly is being adjusted and why. Okay, digging a bit deeper, it seems that sales decreased by almost 9% compared to last year. That's a big drop. And net earnings decreased by nearly 35%. A concerning trend is developing. Even their operating income margin, which is how much profit they make from their core business operations, decreased. This tells us they're not as efficient at making money as they used to be. Let's look at the sales a bit more here. Their commercial food service sales, which is their biggest business division, were down by over 10%. This could be due to restaurants cutting back on spending. Their food processing business decreased, but only by a little bit over 3%. Finally, their residential kitchen sales were down by almost 8%. This suggests people might be spending less on their home kitchens. Another thing to look at is their backlog, which is the amount of orders they have yet to fulfill. This number decreased to $1.32 billion. A declining backlog can indicate trouble, meaning less business coming in the door. So what is going on here? Well, one thing to keep in mind is the overall economy. With interest rates high, businesses might be hesitant to invest in new equipment, which would hurt Middleby's sales. Also, people might be eating out less and spending less on home renovations. But it's not all bad news. Middleby points out that their gross profit margin remained strong. This means they're still making a decent profit on each product they sell. The company also bought back some of its own shares. Companies do this to boost the stock price, but it can also be a sign they don't see other good investment opportunities. Middleby is hoping to turn things around by coming up with new products. Innovation can be a powerful growth driver, but it's not always a sure thing. They're also looking for other companies to buy. Acquiring other businesses can help them grow quickly, but it also comes with risks. Okay, so the company is basically saying that the information in this report is just being furnished, not officially filed. This means they're not legally on the hook for it in the same way as with other reports. Finally, the report is signed by their Chief Financial Officer, Brian Middleby. This shows he stands behind the numbers. Now, let's step back and assess Middleby's overall situation. Their recent results show a clear downturn in sales and earnings across all their major business groups. This suggests some challenging times for the company. High interest rates and changing consumer habits could be headwinds they have to face. However, Middleby isn't sitting still. They're focusing on new products and acquisitions to drive future growth. Their strong profit margins show they are managing costs and are efficient, which is a positive sign. But their ability to turn things around will depend on how well they can execute their strategy in a tough market. So, is Middleby a good investment right now? It's hard to say for sure. The company faces some real challenges, but they also have strengths and opportunities. Investors will need to weigh the risks and potential rewards carefully. Overall, it seems like Middleby is at a crossroads. They need to adapt to changing market conditions and find ways to reignite growth. It will be interesting to see how they perform in the coming quarters. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. Let me know in the comments what company you'd like me to analyze next.